Have you ever found yourself staring at a cryptocurrency chart, heart-pounding, convinced you know exactly where the price is headed and you just want to get in right now? You're ready to buy, no questions asked, at the current market price. Or perhaps you're holding a coin that's just spiked, and you need to sell it before it crashes back down, again, at the fastest possible speed. If you've felt that urgency, that need for immediate execution in the fast-paced world of crypto trading, then you've probably encountered the very scenario where a market order shines. Today, we're diving deep into one of the most fundamental yet often misunderstood order types on Kraken, one of the world's leading cryptocurrency exchanges, the market order. We're going to demystify it, show you exactly how to use it, and perhaps most importantly, explain when and why you would choose it over other order types. This isn't just about clicking a few buttons, it's about understanding the mechanics, the implications, and the strategic use of a tool that can either be your best friend or your worst enemy in crypto trading. So, buckle up, because by the end of this video, you'll be placing market orders on Kraken with confidence and a clear understanding of their power. Before we jump into the Kraken interface, let's establish a foundational understanding of what a market order is. In its simplest form, a market order is an instruction to buy or sell an asset immediately at the best available current price. Think of it like this: you walk into a store, pick up an item, and you pay whatever the price tag says. You don't haggle, you don't wait for a discount, you just complete the transaction. In the context of Kraken and cryptocurrency, this means your order will be filled against existing limit orders in the order book. The key characteristic of a market order is its emphasis on speed and execution certainty over price certainty. You are guaranteed that your order will be filled, and it will be filled now. However, you are not guaranteed a specific price. The price you get will be the prevailing market price at the moment your order is executed, which can fluctuate rapidly, especially in volatile markets. This is a critical distinction to grasp, and it's where many new traders make mistakes. So, why would you choose a market order over, say, a limit order, which allows you to specify your desired price? The primary reason is urgency. If you believe a significant price movement is about to occur and you need to enter or exit a position immediately to capitalize on it or mitigate risk, a market order is your go-to. Imagine a sudden news event causing Bitcoin to surge. A market buy order gets you in without delay. Conversely, if a scam project is crashing, a market sell order gets you out before your holdings become worthless. Another scenario is when liquidity is ample, and the spread, the difference between the highest bid and lowest ask price, is very tight. In such cases, the best available price for a market order will be very close to the price you might have achieved with a well-placed limit order, making the immediate execution more appealing. However, and this is a big however, market orders come with a cost, literally. They are considered taker orders, meaning they take liquidity from the order book by matching with existing limit orders. Taker orders typically incur higher fees than maker orders, limit orders that add liquidity to the order book. This is an important consideration, especially for frequent traders. More significantly, in illiquid markets or during periods of high volatility, a large market order can experience slippage. Slippage occurs when the price at which your order is actually filled deviates significantly from the price you saw when you initiated the order. This happens because your order may consume multiple limit orders at progressively worse prices until the entire order is filled. For example, if you place a market buy order for 1 BTC, and there are only small sell limit orders available at incrementally higher prices, your 1 BTC order will execute against all of them, potentially resulting in an average purchase price higher than what you initially anticipated. Understanding slippage is paramount to avoiding unexpected outcomes. Now that we have a solid theoretical foundation, let's put it into practice on Kraken. For this demonstration, I'll be using the Kraken Pro interface, which offers a more comprehensive trading experience. If you're on the simpler Kraken Instant Buy interface, the options might look slightly different, but the core principles remain the same. First things first, log into your Kraken account. Once you're in, navigate to the trading interface. You can usually find this by clicking on Trade or Kraken Pro from the main dashboard. Once on the trading interface, you'll see a lot of information, price charts, order books, your open orders, and most importantly for us, the order entry form. The first step is to select the trading pair you want to interact with. For example, if you want to buy Bitcoin with US dollars, you'd select BTC/USD. You can typically find a search bar or a drop-down menu for selecting pairs. Make sure you have the correct pair selected before proceeding. A common mistake is accidentally trading the wrong asset. Next, locate the order form section. This is where you'll input the details of your trade. You will usually see options for buy and sell, and below that, different order types. This is where we select market. Click on the Market Radio button or drop-down option. You'll notice that once you select market, some fields, like price, will disappear or become grayed out. This is because with a market order, you're not specifying a price, you're simply telling Kraken to execute at the best available current price. Now, you need to specify the amount you want to buy or sell. You can typically do this in two ways. By quantity of the base asset, if you're buying BTC/USD, this would be the amount of BTC you want to buy, e.g., 0.1 BTC, 1 BTC. By quantity of the quote asset, this allows you to specify how much of the quote currency you want to spend, e.g., $1,000 worth of BTC. Kraken usually provides a toggle or separate fields for this. Use the one that's most convenient for you. Let's say you want to buy $100 worth of Bitcoin. You'd enter 100 in the USD field, and Kraken will automatically calculate the equivalent amount of BTC based on the current market price. Remember, this calculation is an estimate. The final executed amount of BTC might vary slightly due to price fluctuations during the order execution. With that said, thanks for watching, and until next time.